Chapter 13. The relationship between accounting and other business functions. In this chapter, we will talk about the relationship between accounting and different key departments in an organization, say purchasing, production, marketing, and service provision departments. Some of them already discussed in our another class about the cycles or the systems. For example, the purchasing cycles or purchasing systems, the sales systems or sales cycle. So here, we will talk about the department to department, say the accounting departments with other business functions. And we will slightly touch on the topics or the issues that we shared in another class talking about the financial systems or accounting systems and technology. So let's start our introduction first. In this chapter, our focus is on the relationship between accounting and other key functions, such as procurement, production, and marketing. And let's start to discuss on purchasing department. The purchasing department, or the purchasing function, sometimes also known as procurement function, is responsible for placing and following up orders. It coordinates with the accounting departments in different areas. And remember, in our discussion about purchasing cycle or purchasing system, we initially have the requisition initiated by the requesting department first. So if we have such concept or knowledge, then I think it's quite easier for us to understand how does the purchasing department work with the accounting department in an organization. So the first area is about set up the credit terms. The accounting department will work with the buying department or the procurement department here to liaise with suppliers to obtain a credit account and to negotiate credit terms which are acceptable. So accounting department is concerning about the payments. So it's best for the company's interest to set up a long period of credit terms, say 90 days or even more than 90 days. It means that we only need to pay after 3 months of the goods are received. So I think it's very good credit terms if we can negotiate for 90 days of credit terms. Next, the prices. The purchasing department and the accounting department, they both concern about the prices. The accounting department can advise the buying department on the maximum price that should be paid to maintain margins. In some circumstances here, the prices are negotiated by the buying department or the requisition department. But in other cases, the purchasing department have to lead the price negotiation with the supplier. Third, another area is about payment. As said before, the credit terms set up and we need to follow up by the payment. And payments may be approved by the requesting department or the buying department here, but are made by the accounting department. Data capture, like the orders, the purchase order. Order details will be input by the purchasing department and details passed to the accounting department for verification. Say, for example, if the goods received and one of the internal control area is to match the goods received note, the details in the goods received notes and the purchasing order details as well. So the accounting department can verify whether they are different. If yes, then they need to ask why. Because suppose the purchase order issued and approved, the goods received should be consistent with the purchase order. If not, then it is an issue. And next area is inventory. The purchasing department will consult with the inventory section, say the warehouse, and also the accounting department to determine the quantity of items already in stock and therefore the quantity required. So in this case, the purchasing department need to work closely with accounting department to look at the inventory to see whether it is overstocked or understocked. And the last area is about budgeting. In the accounting function, the management accountant is responsible for budgeting, and the management accountant in the accounting department will consult with the purchasing department on likely cost in preparing the budgets. So here are the 6 areas that both purchasing department and accounting department need to work together. And here is an illustration about the purchasing to let you have a clear understanding or in-depth understanding on what we discussed. XYZ Limited is a company manufacturing handbags, and describe how the buying department or purchasing department here liaises with the accounting department when buying some leather to make handbags from DEF Limited, a new supplier. Remember, the key word here is a new supplier. So how do two departments, that is purchasing department and accounting department, to work with a new supplier? Remember 6 areas, so we just take a reference with these 6 areas for our discussion here. First, to set up the credit terms. The purchasing department will advise the accounting department that the preferred supplier is DEF and stated the reason why, because it's about the supplier requisition or addition of supplier in the supplier list. And the accounting department contacts the credit controller at DEF company and provides the information required to set up a credit account. In the usual practice, the new transactions or business relationship between the XYZ company and the supplier DEF, the DEF usually requires a cash on delivery credit terms. That means there's no credit granted. But if XYZ company can provide the information with the supporting to DEF, DEF can grant a relatively short credit period to XYZ, say 15 days or 30 days. And next, about the prices. Accounting department obtains the cost estimate for the handbag being produced. So accounting department needs to work with say the purchasing department, and it discusses with the purchasing department how much can be paid for the leather in order to maintain margins. So for the production, they just produce the goods, but for purchasing department here, it needs to source the best quality of leather as well as the cheapest one for the production, because accounting department will look for margins. So they need to work together to decide whether this new supplier, DEF, is the best supplier for leather in terms of prices. And third, payment. The payment for the leather is approved by the buying department and then made by the accounting department. So it's quite simple and straightforward. Once the goods received, quality is fine, invoice received, and then the invoice are recorded in the accounting system. So once the credit terms is due or almost due, we need to pay, the accounting department need to pay to the supplier, and both buying departments and accounting department need to approve the payment. And data capture. For all the details for the leather will be input by the buying department and details passed to the accounting department to check that the price on the invoice is correct. So here is the work between the purchasing department and accounting department on the data capture, whether the data is needed for payment and for verification. And for inventory side, before placing the order, is at the very beginning stage, the buying department will consult with the inventory section to determine how much suitable leather is already in stock. If there's none in stock, then we need to purchase the materials, the leather for production of handbag. Then we need to go ahead to place the order. Otherwise, we no need to place the order because we have already the stock in the warehouse. And the last area that we discussed is about the budgeting. The accounting department will consult, especially the management accountant, will consult with the buying department on likely cost in preparing the budgets. So here are 6 areas that both purchasing department and accounting department are work closely with each other for the organization. Next, production. Here we will discuss the work relationship between production department and the accounting department. And for the production department, it plans and oversees the production of goods. It liaises with the accounting department in different areas. The 4 areas that we would like to highlight here. First, cost measurement, allocation, and absorption. So what are they? What are the cost measurement, allocation, and absorption, and how these jobs or tasks related between production and accounting? The production department measures quantities of materials. So it's about measurement, the quantities of materials and time used. The management accountant gives a monetary value of them. So once the information gathered between 2 departments are worked closely, the costs are then allocated. Because we have the quantity of materials, we know how many labor hours will be used, and the management accountant estimate the monetary value. Then both of them can work out the cost and to make the allocation, and absorbed it to calculate production cost based on advice given by the production department. So here, that means the management accountant needs to prepare the cost schedule or standard cost card in order to understand whether it is profitable to produce the goods and with the preset selling prices. So the work between production department and accounting department is on cost measurement, on the cost to be allocated on each product, or how much of them should be absorbed for each product. And then once the total cost per unit in the standard cost card prepared, the management accountant can prepare the standard cost card as well as for the budgeting. And for the budgeting, the production department will decide how many items of what type are to be produced. So in addition to the standard cost card, the management accountant needs to prepare the budget. Also requires the production department's input. And the cost of producing these will be determined by the accounting and production departments together and incorporate into the overall budget. In other words, the production department decide how many items to be produced. With these quantities, the management accountant will work for the budget for the inputs based on the production department, and they work closely with each other to have the overall budget. And next, cost versus quality. The production and accounting departments will discuss the features that can be included in products and the raw materials that should be used. They should agree which better quality materials and features justify the extra cost and discuss how to maximize quality and profit. So in this case, it's a bit simple because the involvement in the profit and quality should involve the sales department as well, because there's 3 parties. They should work with each other to determine whether the better quality of raw materials should be used. If yes, how much more that we can charge to customers, and can we sell the quantities proposed by the production department. And all these should be negotiated among 3 different departments, that is production department, sales department, and accounting department as well. And the last area the production department need to work with accounting department is about inventory. The production department will liaise with the inventory section to ensure that there are sufficient raw materials in inventory for the production that is planned. So here are 4 areas for both production departments and accounting departments are working together. And here is an example presented to let you have a clear understanding of how the production department and accounting department work together. We continue our example on XYZ Limited on manufacturing handbags. The company has commissioned a designer to design a new style of handbag, and discussions are taking place about the materials to be used and the quantity to be produced. So describe how the accounting and production departments will liaise over this. So we based on the 4 areas that we discussed to see how to apply in this example. First, the production department would need to estimate the quantity of materials are required because we need to measure the cost. And together with the accounting department, we need to know the overheads to be allocated to determine the full cost of handbags. So here, we talk about the cost measurements on the raw material side. Next, we need to know how much of the utilities will be input, how much of labor hours will be input as well. All this will be absorbed in the calculation of the standard cost of the product. So finally, we know the full cost of handbag. And the production department, accounting department, and marketing department, maybe the sales department as well, will discuss how many bags or handbags here are likely to be sold at what price and determine how many should be produced. A budget can then be produced. So in order to have the budget or to do the budgeting, the production department, accounting department, and marketing department are involved. For the cost versus quality, for 2 departments that are production department and accounting department, sometimes involved marketing as well, we'll discuss the various grades of leather and the material that could be used, their cost, and the extra price that could be charged for better quality material. They will decide on the best combination of cost, quality, and profit. So as here, sometimes we cannot exclude the sales department in the discussion about the profit, because whether the product can be sold at a certain price point, it is the sales department call. So for the production and accounting departments, they need to engage the sales department or here marketing department as well to discuss whether the material used with our higher grade materials used for the handbags, can you sell at higher prices? If yes, how much the profit? So all these should be worked among 3 different departments. And for the areas of inventory, the production department will discuss with the inventory section of the accounting department in the materials required. Some existing materials may be usable for the new product, or entirely new materials may need to be purchased. So here, production department need to go through the warehouse to see the material stock, as well as production department sometimes need to work or consult with the purchasing department as well, because the purchasing department can advise which supplier should be chosen for any new materials, because we are talking about new materials. Any existing suppliers can supply the new materials, or the new materials can be supplied by them with the lowest price. Then it is the purchasing department's job in order for the company as a whole to have the best solution.